Everybody, hello. Thank you very much for taking a bit of time out to look at this clip. By the fact that you've clicked the link and looking at the clip, it looks like you've got some interest in wondering and finding out a bit more about private equity. What is private equity? It's quite simply, equity is something you get a piece of, something you own, a portion of, if you like, a piece of the cake. And obviously the private aspect is meaning that it's yours, it's your private equity. A lot of people work all their lives, we all work all our lives, a lot of people work all their lives just to achieve equity in their property, for example. Having equity in your property would mean you've got a difference between what you owe on the property and what the value of the property actually is. So that equity is yours. And you can obviously borrow and lever against that equity. If you own the property, that equity is obviously an asset. Now, private equity itself is not something that's been bandied around for many years. We've been selling into the private sector. And by the way, the retail sector or the private sector, the retail sector or consumer sector represents over half of the wealth in the world. Okay, let that sink in. It's not all about corporates. Retail equity and retail wealth represents over half of the financial wealth in the world. It's a huge amount. Now, the reason things haven't been left open to the public so much is basically because the banks and the financial institutions would like to keep this to themselves. There's a reason why they pay you 1.5% a year, and why they're making 200%, 300%, 400% a year, and I have actually seen those percentages banded around. When you look at situations such as BRICS, B-R-I-C-S, Brazil, Russia, India, China, South Korea, and some of the other emerging markets, some of the money that Western banks have been pouring in, and merchant banks, etc., and governments have been putting in, is absolutely huge. Billions and billions and billions, hundreds of billions, and the percentages are absolutely outrageous. So the banks will very, very gladly take your money as your deposit holder. You'll walk into the bank and leave your money there, or you'll leave it there online. Not many people walk into a bank these days. And that money goes to work for the bank. The bank have traders, brokers, merchant bankers. They have intermediaries, they have agencies, and they have their feet on the ground in different countries. So they put that money to work, and it can be in a strong currency like the US dollar or the pound sterling or the euro. And it can be put to work in a weaker currency where they'll get a lot more value for it. They will invest in companies that they see as having a good future, good revenue streams, or a huge demand in the market sector. And that's exactly what happened in China. And there was an absolute boom in the amount of money made out of pre-IPOs and IPOs during the dot-com boom. From the year 2000 on, I was working on one of the Asian trading desks, and I did wonder for some years where this was all going. 2008, there was a China IPO crash, and a lot of the companies crashed purely and simply because of very, very bad, let's just say fraudulent accounting practices by one or two specific accounting firms in particular based in China, who were representing some fraudulent numbers just to get these Chinese companies on the stock exchange in the USA. Now, of course, they went onto the USA markets and made billions of dollars for themselves, and were all treated very, very well with great respect because of the money they'd made. The shareholders, unfortunately, were left holding the baby, and lost an awful lot of money in most cases. Very, very few of those 2008 companies came out in a positive vein. Now, one of the reasons I got involved in this business was because during that period, it was my job as a broker trader to try and find solutions. My handling of the distressed positions, distressed portfolios, was one where a lot of the clients had lost money or were handling stock or hold stock that was not able to be sold. One of those sectors was the Regulation S sector, the Reg S as it's known. It's sometimes even called penny shares. But it's where the pink sheets in America and Canada have stocks which have not yet fully listed, and were struggling to find parity. So what I did was I started to work very hard and did some diligence and research and found some great contacts for doing switches and swaps and finding different ways to get people out of positions which were very, very difficult to sell on the open market. My contact book grew, and I suddenly realized that the private equity market was actually a great way to help settle dormant accounts and some of the difficult situations. So my company IPO Direct has been listing companies for some time. We're not one of the biggest in the world. We're not Morgan Stanley. We're not Citibank. We don't pretend to be. But you will get my personal attention. We've got a small team of people here with some experience that I think is as good as anything you'll get out there. And we work very, very hard. We're very good at finding good companies, and the companies we do find, we're very happy that we've met them, done diligence and research on them. So anything we bring to you, you don't need to worry too much about who they are or where they're from. We're very, very happy with the results. Now, there are times with private equity where there may be an offer for the company before it even lists on the stock exchange. So we might offer you a presentation, for example, company A, ABC. You might buy the shares at 50 cents a share, and there might be a 3-year hold on it before it lists on the stock exchange, say in Frankfurt, for example. Now, that company may very well, and has recently, actually some of these have recently drawn a lot of attention. That company may very well draw some attention from outside bankers, outside institutions, etc. And they would like to take that company as is and make an offer. So there's a possibility we could get $1.10 or something in that region on a 50-cent company. And we will go through the shareholders list, say for example you're one of them, and say, would you like to take 60 cents on your 50-cent position at $1.10 and sell out of your stock for a quick profit? And if we get a majority request saying yes, I'm happy to sell and take the profit, you're entitled to take a profit, why not? And that's what would happen. But what we do for the first time traders, and this is a very important fact, we do not encourage selling out early. We're looking to bring people in at the moment on 1 or 2 very, very strong, lucrative existing companies that are looking for expansion funds. And in some cases, they've got a convertible debenture. All right, it's a double whammy. They've got a bit of a safety net with this, because for every dollar that goes in any currency, there's a dollar added by way of convertible debenture, and it gives an increased bonus for you, a reduced risk, but also it expedites the success of the company. It makes the company's success faster. Okay. Now, at the moment, we're looking at avoiding the AI sectors because alternative intelligence is not an area we feel is going to be benefiting from our investment monies. Quite simply because we feel it's a very, very overpriced and risky sector. And I'm going to add a quick note to this and say, just on resources alone, these data centers, as they're known, they're using 250,000 litres of water a day. Let that sink in, a day, just for cooling. Now, the huge electricity bills, the electricity has to come from somewhere, and it's not all coming from solar. Now, the electricity bills and utility bills, as you know, just as a citizen yourself, you know electricity is not cheap, and it's not getting any cheaper. So the AI system and the AI projects that are out there right now, we see like this. Personally, I think at the moment they're using it as a hook to get people addicted to it, for want of a better description. And I believe that what they will do is that they will start to put subscription prices on anything AI. I believe very, very soon you will find AI as a very, very expensive alternative for anything that's happening on your internet. And I don't really think that the average person on the street needs it. So far as I can see, all we've got at the moment is crazy video clips on the internet and social media that is confusing everybody. They really don't know what's real and what isn't at the moment. But there we go. What we should be doing is looking for companies that create jobs, not remove jobs. And I think you'll agree with that. So, getting back to the point of private equity, what you're looking at is being rather more someone who's got access to their own bank. Once you become involved in private equity, you'll find that your money is growing, but it's growing in a stable manner. I trade every day on the markets, and I understand what the markets do. It's a roller coaster. And for anybody who's trying to buy and sell stocks on a regular basis, you will know that the ones that you just sold then go up, and the ones that you just buy then go down. That's just the way it is in many cases. Now, I spend a lot of time doing diligence and research, and I've got a gut feeling about most of them. And I would say about 70%, 7 out of 10 of my trades go in a positive direction. I do not hold the losers, I get rid of them. My money works for me. And ask yourself this question at the end of this video. It's a bit longer than I promised, I do apologize. Ask yourself this question. How does your money work for you? How does your money work for you? Because having money in the bank is actually not doing you any favors at all. It's a comfort thing. You've got to take all the emotion out of money if you're going to be successful. You've got to make sure that your money is working for you, but it's working in a safe manner. I fully understand that there's obviously risk is something that we cannot eliminate, but we can manage. Okay? Risk is something we cannot eliminate, but we can manage. Now, if you've got money in the bank right now, you'll know it's very disappointing. In fact, most people, by the time they look at their service charges, management fees, and costs of doing business, they probably don't make any money at all. It's just the fact that they've got money in the bank. But if you've got money working for you in a safe place, and it's in a private equity position, say for example, you've bought shares in a company which is a pre-IPO, a company which is going to initial public offering, list on the stock exchange. Between putting money in and when that money lists on the stock exchange, it's not exposed to any market problems at all, any market deviations. It's there, it's locked in at that price, but it's going up intrinsically. Okay, the value of the company is increasing, your money's increasing, and what we do is we always look for the day when that bell rings and you say to your friends at the barbecue, you're not going to believe this, that company you laughed at me for investing is just listed on the stock exchange, and I've made very, very well indeed. And they'll ask you, how did you get to hear of it? How did you get to know of it? A lot of our business comes from referrals. And if you have any business associates, business colleagues, or referrals you could possibly bring to us, we would be absolutely delighted. We'll treat them as best we possibly could, first class service. And listen, in most cases, we will get on an aeroplane and visit you if it's absolutely necessary. Okay? Now, my name's Rob Jowett. I'm looking forward to hearing from you. We do need a few details from anyone who's interested, and it's purely because we are also regulated. We're regulated by the powers that be, all the KYC, know your client, anti-money laundering laws, all abide to us, banking regulations, all abide to us. So please, just let us know a little bit about yourself, who you are, where you're from, and what it is you're looking for. There's really no minimum to put into these things, and when you're looking at how long you can hold it, listen, what I would suggest is this: look long term. All these short-term youngsters that have been coming to us with questions, I fully respect they want to make a quick dollar. Who doesn't? Of course. But you've got to think long-term. The very facts are that when you think long-term, invariably short-term profits do actually come your way. But what I'd like to suggest is that put money in, what you can afford to put by for a couple of years, and you'll be very, very pleased indeed with the outcome. What you do with that money after that is up to you. But if you're involved in a company which is already listed on an exchange from being non-listed, and it's got a share price, there's a very, very high chance, around 85 to 90%, it will continue to rise, continue to develop. That's your revenue, that's your income, that's your pension, and that's your life support system financially, okay? And if you do that, Congratulations. You've made a great decision. And I'm looking forward to speaking to you again, personally, and I hope we meet someday. Thank you very much for your time.